Hey everybody, welcome to this video. This is Shane Smoleny from Wolftrader Futures, and we are going to be doing a webinar today on taper talk, talking about what's going on with the Federal Reserve. Uh, I'm just going to do a few sound checks and audio checks and video checks, so let me know if everything's coming through okay with the sound, and we will be getting started shortly. In the meantime, special thanks to our moderators. I really appreciate all the work that you do, Ron and Pat. Really helping us out here get these webinars off the ground, moving along on a weekly basis. And we're trying to cover some different topics each week. So hopefully everybody can hear me okay. And we will be going forward here with the webinar. Okay, so what's up, Al? How's it going? All right, so we get some people here slowly trickling in. If you guys haven't had a chance, go ahead and like and subscribe to the channel, like the video, subscribe to the channel, and let's get these numbers up on the channel so we can keep this going on a weekly basis. So this is a webinar that we do each week, and it's meant for everybody. I give broad-based overviews, and I also give updates on the service. And this week we're going to talk about the taper because this has really been in the news with the Fed, and we're going to break it down a little bit for you. So first of all, if you need to get in contact with me, you can reach me at shane@wolftraderfutures.com or www.wolftraderfutures.com, or on YouTube, Wolf Trader Futures, that's what you're on, or Twitter's Wolftrader FUTU1. So for those of you who watch TFNN, I hosted a show this week, and it was kind of crazy because at the last second, I was talking with Larry, I Skyped with Larry Pesavento, for those of you who don't know. I Skype with Larry throughout the day, and he calls me up like 5 minutes before the webinar, and he's like, we're screwed. My laptop's broke. He's like going into a panic. He's like, you need to host the show, and I was like, what? He's like, because I was coming on in the show later on in the day. He's like, no, you need to host. You need to host. And I was like, okay. I was like, well, okay, let's do this. So I was throwing together a lot of topics like as fast as I could because I only had a material for like half the show. And so I just crammed a bunch of stuff together, and I couldn't even hear if I was online or there were callers that called in, and I couldn't even get that stuff straight. So we made it through the show. It's always an adventure there at TFNN. It's a great place. If you guys haven't checked it out, check it out. Just a tremendous wealth of knowledge. Some really talented market forecasters go on throughout the day there, and it's a nice group of people. And I think a lot of the people here are from TFNN, but that was just like literally last second. So I was like talking really fast. I was like kind of going through everything. And so what I want to do today is I want to go back through some of those topics at a little bit of a slower pace. This is not going to be that long of a webinar, but I do want to address the taper in terms of what's going on. So we will get to this. I just need to go through the beginning here, which we normally go through. So for those of you who don't know, we have many different services here. We have the S&P 500 newsletter. We have the metals newsletter. We have the energy newsletter. We have currencies. We have cryptocurrencies. We have a uranium letter, which is astrology. We have stock and ETF service. So these are all separate. These are newsletters. The stock ETF is a service. It's not a newsletter. I don't put a newsletter every month, but you just log on to the website and you see the service. So this may be a little bit different. It was kind of interesting. We had a lot of new subscribers last week come in, and I think some people expect this to come through like an email. The way that we work on this site is you log on to the website to get the information, unless you're on the live Twitter stream where I pretty much post all day in commentaries. So, and there's a lot of resistance to Twitter. It's amazing. A lot of people will not go near Twitter, but I can tell you that it's a very good opportunity for us to connect and to communicate throughout the day. And I know, believe me, I know a lot of people don't trust the big tech and all that, but it's a private Twitter feed on the this is the platinum membership here. It's a private Twitter feed. Some people just make, fake accounts with their fake names. You don't have to put your name out there, but I highly recommend it if you're interested. We have platinum members that will not go on Twitter, and they just won't. But this is really what it's meant for, guys. It's really meant to have the live streams. I mean, there's more information there for you, but I would encourage you, if you're a platinum member and you're not joining the Twitter, I would just encourage you to do so. I think you'll be pleasantly surprised. It's a nice environment. It's a nice group of people on there, and we really give commentary throughout the day. So again, if you're a platinum subscriber, and we have them that won't go to Twitter, I would encourage it. I've looked into doing private messaging services, but nothing really stands up to Twitter. Twitter, I mean, I think when you think of Twitter, you think of like the open accounts and people just shredding each other 24 hours a day and with all the politics and all the venom. That's not what this is. It's kind of just like a private feed where we just post information. So again, I would encourage it. I know I can't force people to go to Twitter, but if you're a platinum member, you're missing a big part of it. Of course, you get all the trade services. The Fast Fed Big Runs guys is having another really nice week this week. We had a big oil trade. We had a big gold trade. We took those shorts across the Fed meeting. I trailed them down. We locked in some really nice gains. Easy Timer, Pairs Trader. So all of this is the platinum service, and that includes everything. So I know I kind of jumped ahead here. The gold service is all of these newsletters here. But again, I would just encourage you, if you are a platinum member, to just consider trying the Twitter. And again, I completely get it. I get it that nobody trusts big tech and all this stuff, but it's really not, I don't think it's what you think. It's not such a public thing. You can just sit there and be in the background. You don't have to participate, but it's a really good way to get the live feeds throughout the day. So, I mean, that's enough said with that. If you don't want to do it, that's fine. But, you know, there are platinum members who just won't go on. So I understand with everything with the election and Trump and all that stuff that happened. I mean, a lot of people feel very strongly, but for now, that's the best messaging service that I have. So I would just encourage it. So you can go over to the website, wolftraderfutures.com, and check these out, all these different services. If you want to get the newsletters, you want to get the gold, which is the bundle, or you want to get the platinum, which is the live feed throughout the day, go ahead. It's a week trial. You can try it out. If it doesn't work out for you, that's fine too. It's no problem at all. Either way, it's fine with me. Disclaimer, this is so important, guys, that this stuff is risky, especially what we've seen with the S&P with this big melt up here. It's, past performances are not necessarily indicative of future results. So we've been having really good weeks with the big runs, but that doesn't mean next week will be good too. These things fluctuate. This service is meant to be an educational service for the book, A Trader's Guide to Financial Astrology. This is a book that I wrote with Larry Pesavento. It's a good introductory book on astro trading. I go into all the different meanings of the planets, and then I looked at how the planets affect the markets through cycles tests back through time. We looked at the lunar cycle back through like 1900. It's pretty good in terms of outlining the basics. It's not super advanced. It's not dealing with trading systems or anything like that, but it's to give you an idea of, hey, look, these planets are supposed to mean things, and when you test them against the market, it actually does mean that. So anyway, this is separate than Trading Ridge Analytics, which is my firm. I'm a registered CTA and CPO. So this is really more for people who are just interested in a monthly newsletter. Okay, this is really not even a trading service unless you're into the platinum. The platinum, we do offer like live trades like that. This is what I was talking about with the oil and the gold this week. And then the data used in this is public knowledge. Everybody gets it at the same time. I don't tell one person one thing before the other. Everybody gets it. And I don't know anything about your background. That's why this is a newsletter. Like if I'm acting as a CTA, I'm asking for your personal information, finding out if you're suitable as an investor. I'm trying to I'm directly managing the account. A newsletter is just like, I don't know anything about you. Here's the newsletter. Good luck. I'll answer questions, but I'm not going to tailor any advice to your specific financial situation. So there's a big difference between a newsletter and acting as a CTA. Okay, so commodity trading advisor. Huge difference. So this is a newsletter. This is just more educational. We talk, we have discussions, and so I give you the background. Warning about using fragments. So this stuff changes. We've seen the Fed go into this warp speed mode where they're just acting at such rapid. I mean, it's absolutely crazy the speed that they're working on day to day. But if you can get gaps of information, so if you focus on something this week, it might be different next week. So we really focus on the daily Fed juice updates. I never share your personal information. This is a big thing about Twitter too. People are worried about, oh, if I sign up, I'm going to have my name out there and big tech's going to come spy on me. You don't have to even sign up with a real name. You can make a fake account, a fake name. It is a private Twitter feed, the Wolftrader one, but again, I'm not going to share anything with anybody. I know a lot of people want to keep their privacy. I'm fine with that. Um, I know some people want to do more community stuff, and I'm looking into that, into possibly having like a message board or something or a forum. But for now, I think the majority of people really are kind of to themselves and want their privacy. And so I respect that privacy. I don't share your information. I don't put your name anywhere. I don't buy lists. I don't sell lists. If you're on the email list, you signed up, and that's just what it is. So the terms of services, that you understand this stuff is super risky, guys. It's super, super risky, especially in today's market environment with the Fed and with these huge melt-ups that we've been seeing in the S&P 500. It's been really tough to be short on this thing, even though I think we are still in trouble with this in terms of the longer term picture. You can see on the short term, you can get huge swings, right? So it's super risky. So just understand that, guys. Understand that. All right, so let's get into news and events here. So I've changed this up a little bit. So there are some new things here coming on. So first of all, the user guide is being updated. I'm going to keep updating the questions and answers. It's on the website if you want to check that out. The Japanese yen is live. We've been looking at the Fed use and the double lunar cycle. Okay. This was another strong week for the fast Fed big runs. Oil had 3.27 points on one trade. We trailed that down, and so I'm not going to go into that again here, but we really get aggressive with these things. When they get into profit like this, I really start to trail it down. And I waited until the Fed meeting because I didn't, it was already up $1.50 or something overnight. And I was like, no, let's leave it alone because I felt like it was going to keep going down, and it did. And so we locked that in. Gold, we had 19 points. These were good trades. These were both shorts. There were long trades. I don't want to take any more long trades right now. I'm very concerned about multiple markets having dislocations to the downside. There were two trades we didn't take. Long oil, long gold. They both would have been profitable. I don't trust the markets right now. I think things are looking really, really shaky, in spite of our recent melt up here in the S&P. So just to kind of put that out there, just to give you an idea, the S&P gold corn easy timer, that should say actually just S&P and gold. This is going to run on a new Epic 6 algorithm. And so for those of you who don't know, the Fast Fed Big runs on this Epic 6. So I have to update this about once a month. So I'm going to run the Epic 6 this month. It's a new algo for that. I did just post the solar cycles. So for all of the different markets for the next 4 months on the gold member page. So if you're a gold member, you can go there right now and see these things all the way out through April for the specific turning dates. That's for S&P metals, energy, currencies, cryptocurrencies. So that's posted. So check it out if you want to go there and see the broad term outlook in terms of the seasonals. The solar cycle is really like a seasonal. So when you hear the term seasonal pattern, that's what the solar cycles are. So you can go there and check these out. Again, it's in the gold member page. If you're a platinum member and you're not on Twitter, you can still go there too. You have full access to the website if you're not on Twitter. But again, I strongly recommend if you're a platinum subscriber to try out the Twitter. And again, I understand your hesitancy. I know a lot of people don't trust social media, but Twitter is really where it's at, guys. That's where we're talking all day, having conversations and posting things. Solar cycles anyway. So this is here. So if you're a platinum member, you can head on over to the gold member page and get those. That's updated and they're updated for every single symbol. So we're good through April on that. Okay. So every now and then I go in there and I just update those. So we look at like the whole year, and then I update very detailed the next 4 months. So that's what that is. If you're in the newsletter, you get this every month. You just get what is the monthly turning points for the solar cycle. So that's out there. Next slide here is going to be, I should say 11.6, guys. Lunar cycle profit graphs are in the S&P homepage. So if you want to go see the double lunar cycle, it's in the homepage. I'm going to show you that in a minute, what that image looks like. Actually, I'll show you now. I'll scroll down. I had a question about that. I'm going to answer it again later. But if you go to the login page, it's down here. So when you log in, if you want to see how the double lunar cycle is doing for the S&P, this is for S&P subscribers. You go to the bottom down here, and it's this black button. And so this is meant to work on mobile phones too. So you can click that and you can see how the profits are doing. It's doing very well. It's over 400 points now. So yeah, it's pretty good. I mean, it had a short trade that it lost on in the last 2 days with this melt up, but for the most part, it's doing very well. And the beautiful thing about this, guys, is this is alternating long and short trades. So, any monkey can bang on a typewriter, and at some points, one of them's going to type Shakespeare, right? So if you have a market that's taking off, right? Like you've heard the term "don't confuse brains with a bull market," right? That means that basically just because the market's going up and you own stocks, it doesn't mean you're so smart. So when you have like trading, just different people looking at different ways of trading contests or investors, if you're in a bull market, you just hold long and that's it. But this thing goes long and short all the time. So the fact that this thing can make money, the money that it does, tells you a lot about the efficiency of it. And I want to emphasize that because if the market's just going up and you're just long one trade, it doesn't really, I mean, it's good if you can stay long, but I'm just saying in terms of a trading system, this thing's alternating all the time. Long, short, long, short, long, short, long, short, and it's making money. So that's why I like this, and that's why I think it's proven from a statistical standpoint. When you have a high number of samples and you're going long, short, long, short, long, short, you have a much better chance of that continuing to be successful into the future. So just pointing that out. Back here, streaming crypto coming, Cardano's coming. Double lunars. Okay, so we're gonna add. I didn't put that in there on the big runs. Uh, Bitcoin's in the queue. So Bitcoin's coming up next week. So we're going to have fast fed big runs for crypto next week. So the swing trades that you saw back here, this is on the platinum, guys. But the fast fed big runs, we're adding Bitcoin to that next week. It's coming up. It's coming. It's coming. Swing trades for Bitcoin. All right. Okay, this is a big announcement here. I wanted to talk about this. This is a big upgrade coming. So for the stock ETF service, I am going to start with double lunar cycles digital format. What that means is that you're going to have the exact buy and sell points. So we have double lunar cycles now on the stock ETF service, but it's really just following the analog shape of the curve. I'm going to have actual graphs like with the turning points like on the S&P for all of the ETF symbols coming up soon. So that's big because these double lunar cycles are doing so well, and we had the analog on the stock ETF, but I'm going to have the actual graphs with the exact turning dates for you. So that's coming up. So that all of these upgrades are included. So if you're a stock ETF member, it's all coming to you. Okay, so you're going to get all of these charts with the turning points coming. The same ones that we use for the S&P, the same ones that we use for Bitcoin, the same ones that we use for the bond, the same ones that we use for the US dollar, the same algorithm that we use is coming to the stock ETF. So you're already, guys, I told you that these upgrades are going to keep coming fast and furious to these services. So if if you see the service now, it's going to be very different in a few weeks and a few months. So again, huge upgrade coming for the stock ETF. The double lunar cycles are coming for every symbol. Now I'm going to add probably about one a week. So this week I'm looking into adding one, maybe Apple, but they're going to start showing up and they're going to last for a month at a time. So you can definitely see how they're going. We do have one for Caterpillar right now. Caterpillar has that, but they're coming for all of them. That's a huge, huge upgrade, and I feel good about it now because we're continuing to add about 2 to 3 logs per week. I updated Canadian dollar, copper, and gold this week on the double lunar. So I'm doing a better job of getting all these trading logs updated. So each week we'll have about 2 or 3 more trading logs because we have over 20 different types of trading systems that we run here. But the double lunar is really, I think, the premier trading system along with the Fed juice. And these trade histories you're going to see them posted more and more and more. I'm going to add about 2 to 3 symbols each week. It just takes time, guys. And I want to make sure that uh, these systems have a track record and a history behind them. Not, the double lunar has about 8 months on the other symbols. Fed use has a couple year, maybe a year and a half or so on some of these new symbols. The S&P goes way back, but that's coming. November newsletters are out, so check them out. And we're still working on those live streams. That might be a way that we can communicate. But again, just try to understand some people want the community, some people want the privacy. And so it's tough because if we make a forum, then everyone pops up on the forum, and the people that don't want that want to be kind of anonymous are showing up, and the people that want to talk and chat and network, that's great, but there's not everybody wants to. So I'm trying to figure out the best way to do that. Right now, if I do a forum on the website, everybody pops up, and some people just don't want that. So I'm working on it. But it's coming. I mean, all this stuff's going to come in time as we grow as a service and together. So I'm working on it. I just got to figure this out. Like I said, I still can't get some people to come to Twitter, even though they're platinum members. It's a bunch of people that won't do it. And again, I understand, but my frustration is, we have this service, and I want everybody to be able to participate in it. So, all right. So next slide here. So this is a summary of the the fast fed big run. So this is, I believe this is going to be the Cadillac, the big trading system, the one that makes the most money. We had a lot of success last October through about January. Then it went flat. But what's up, Gary? What's up? All right, we're getting the TFNN crew here. We had a lot of success last November, October through January. Then it went flat. I think this is on the rise again, guys. I think it's on the rise. S&P is acting still nutty with the Fed, but I think that's going to change with the taper. We're going to talk about that. Oil has been off. This is like 8 out of 9. The first 8 trades is... let's see if I can find this. It's like 8 out of the 9 first trades are winners. And I think a lot of this is because we are trailing. This is, okay, so there's 9 of these first trades. It's made 12.51 points on 9 trades. It's doing well. A lot of that is because we are getting aggressive and trailing this stuff down. So these are futures. Gold it's doing much better. Corn, it's doing better. It's chugging along. This is the one everybody's waiting for. Bitcoin it's in the queue. Okay, like I've been testing this. It's ready to come online soon. So yeah, this is going to be the one everybody's excited about. I've got the most requests for Bitcoin. We are going to be adding Cardano to the service too. But the big runs, this is the next one coming up. So you're going to have swing trades on the platinum for Bitcoin coming up. Okay. All right. So S&P summary. So I'm going to go into this now. This is what we talked about on what I talked about on Larry's show. And again, I was literally given 5 minutes notice that I was going to host the show, which is fine. It's just it's the adventure, right? Like it's like literally like, hey, my computer's broken, help. So I try to help him out whenever I can, help Larry out. And so, but I'm going to go a little bit slower now, and I can see your questions coming up, and yeah, so I'm going to try to answer them. Okay. But I'm just trying to give you guys perspective about the subscribers, because we have so many different types of people that subscribe here. And you wouldn't believe some of the people that subscribe here. You wouldn't believe it, and they don't want to be known. And I'll just leave it at that. Some people do, and some people want to talk and chat, and that's fine. I'm trying to find the best way for us to get the people that want to talk, and the people that want to stay away can stay away. I'm trying to respect everybody's privacy. So, yeah. All right. So let's get over here. S&P 500. Okay. So, all right. So we have our own perspective in terms of what the Fed is doing. And so this is a little bit different than just following price action. I know a lot of people just follow price action. And if you're a technical analyst, like you're following charts and charts technicians, you're just looking at price. You might look at volume, but you really just care about price. So that's not what I'm looking at. The Fed is the engine for all these rallies. So this is really my area of specialty, where I focus on the data. I get it every day. I parse through it. We come up with the Fed use. There's very solid evidence of day-to-day influences. So again, I'm focusing on evidence, not speeches, hand waving, smoke and mirrors. I'm focusing on evidence that I see every day on the chart. And so that's what I follow. I follow what the Fed is coming through and the evidence that we're seeing. Right now, the S&P is trading lockstep with the Fed. And these long-term internals that I track are falling. They've been falling since July, even though we got this huge rally. It went up to the 2.618 expansion on the intraday. But I still think there's problems when this is decreasing. So I think the sell-off in September caught the Fed off guard. I don't think they expected it to be that intense. They began two record surges off the lows, and short term, the Fed has been really strong since October, but there's a channel that this makes, and we might be coming up to the upper end of this channel. And I think they're already turning off the channel now. And so I think the Fed, they ran this up into the taper, likely into that announcement on the infrastructure bill, which did pass. The first one passed. And so, I think this taper, it's coming. I think they're going to do it. They're counting on positive seasonals. They wanted to start to taper with the market in good shape, basically. Previous seasonals, by the way, have failed, though, in previous tapers. So the Fed internals will decline with the taper. So we've seen that before. So this is going to happen. So I had these slides just kind of summarizing some thoughts here. Number one, the Fed uses the S&P engine. No Fed, no rally. Okay, this has always been true since 2009. None of this has really changed. I mean, this is something that no matter what, this is a constant in the market. We have never seen the market go without the Fed once, not even once, since 2009. It can do it for a month or two, but then it always comes back and has issues, and the Fed has to come in and bail the situation out. So other forecasting tools like cycles, transits, Elliott wave, Gartley, Gann, divergences, sentiment, whatever, they all work around the context of the Fed use. So everybody's got their own thing that they're doing, and I like Gann, and I like Elliott wave, and I like divergences, and I like sentiment, and whatever it is. But this is all in the context of what is the Fed doing on the big term. And so that's what I focus on. So I'm focusing on big picture here. The recent rally off the lows, this was record strength juxtaposed against long-term weakness. So we saw a record rally by the Fed, and they even had a banking holiday in there where they had to make up ground because there's no Fed use during a banking holiday. And that's kind of weird. Usually when we have holidays, the markets close with the banks, but not so. And we saw the market come right down the minute that the banks closed, and then the minute the banks opened back up, it shot back up again. And I'm going to show you what that looks like. So the Fed taper will lead to a decrease in the Fed internals. So we've seen this before with tapers. This taper is happening at twice the speed of previous tapers. So I really think that there's going to be issues here. Now the market is going crazy with all of these, parabolic moves and sentiments high now, and all the hand wavings going on and the bells and the whistles. But the point is, from my perspective, what I'm looking at the Fed internals. So I just understand that. So I understand your resistance if you say, well, how can you say that we're at all-time highs? It's rallying. It doesn't come down anymore. It's never going to come down. Well, I'm focusing on this because, everything's fine in a city before a 9.0 magnitude earthquake comes. But there's fault lines underneath the earth that are moving that people can't see. Okay, so I'm looking at the fault lines underneath, and everyone's up there jumping up and down and celebrating, but the fault lines are moving and they're about to go. And so that's what I'm trying to explain to you, that I'm looking at what's going on beneath the surface, not just the surface. So usually these things go lockstep together. Usually we don't see the Fed pulling back long-term and short-term spiking like this. And I'm going to show you, you'll get an idea of the intensity of this, of just how fast that they spike this. But let's talk about the Fed taper. So this is news, and we're finally going to get it. It's coming. So what does this mean? Well, currently the Fed is purchasing about $120 billion per month, $80 billion in treasuries, $40 billion in mortgage-backed securities. So these are purchases that go on throughout the month, and they're not even necessarily even. Okay, so sometimes they do $1 billion a day. We saw on Friday they really put the hammer down and purchased $8 billion on Friday. So these types of uneven movements throughout the month, they're going to come to an end. They're not going to be able to do this anymore. You're not going to have an $8 billion day like we saw on Friday. Everything was thrown at this market. The kitchen sink was thrown at this market to get this thing up, up on the jobs, up on the Congress, the bill, because I think they feared the reaction to the taper. So they did a really good job of waving the hands and, no, it's over here, and it's all good, and we're not going to raise interest rate. No, but there's a taper, and it's coming at twice the rate. I think they're worried about inflation. I think it's real. I think they're trying to talk one way and act another. This is serious business. This is not a little thing. 15 billion a month is twice the speed of before. 10 billion in treasuries, 5 billion in mortgage-backed securities. Okay, I'm reading this, guys. It was rapid fire and it's effective to get people interested. I've been sending out the replay. Everyone might want to download it, send it around. I'll be driving around for 2 questions to address this question. Okay. I'm just reading some questions. I'm trying to get everybody involved here to read all the questions. This is a good way to do it, by the way, on YouTube. The only problem with YouTube is I can't give out too much subscriber content here. Like I give really specific dates for subscribers, but I try to give like overall picture for everybody. And this allows people to come in who aren't subscribers, who just want to show up and watch it. So I'm doing my best to try to integrate all this stuff, but we're working on it. So the taper is, it's double the rate. The taper is set by the end of June. Okay. What does that look like? During the day, how do we get the trade alerts? Trade alerts are on, okay. Okay, I think he's talking about the fast fed big runs. There's a question, how do we get the trade alerts? So the fast fed big runs are posted on, there's a platinum trade board on the platinum page, and then on Twitter I post screenshots of the positions and upcoming trades, and there's a picture of J.R. Ewing from Dallas, right? Because it's a long story, but you see the picture of J.R. or Larry Hagman. That's the big runs, because it's like Texas-sized trades, guys. These are like big runs. So the point of this is it's like you know, you get the point. Anyway, so you see those screenshots throughout the day. Those are the big runs. Those are the big swing trades that I'm talking about with the oil and the gold. And that's the one with Bitcoin's coming. Those are futures. I know some people like ETFs and stocks, but here's the thing about futures is some of those trades we got out at like 10:30 at night. Like that's just when it moved. That's when oil moved. If I see that, I'm going to jump on it and I'm going to trail it down. I'm going to lock in those gains. Okay. So just to let you know. All right, this is what the Fed taper is going to look like. So I'm gonna explain this to you. All right, so here we are. So we're up here. This is September 30th. We're at 120 billion. October 31st. This is Halloween. We're at 120 billion. But you're going to see, and usually I think they said it's going to be around the 21st of the month, something like that. And we're still not clear on this, but you can see that this starts to come down. So it's 15 billion. So by November the 30th, it should be 105. By December the 31st, it should be 90. And by the way, guys, I think we're going to start to feel it really heavily around here, right around the end of September. I think December. I think December could start to feel this. Once we get out into January and February, the market is really going to start feeling this. And the reason I say this is because I've been watching the S&P and it's very sensitive to the Fed right now. The Fed is moving in lockstep with the S&P, like literally every fluctuation that the Fed does, the market moves that direction on a day-to-day basis. I've never seen that. So the market's really, really fragile right now. In spite of the rally, if the Fed is going to be pulling back, I think the market's going to feel it. Then 45 billion by March 31st, 30 billion by April 30th, 15 billion by May, and then 0 by the end of June. So this is real. This is coming. I think this is going to have an effect on the S&P. I don't think it's going to be a good effect. Okay, so I'll just leave it at that. Now, we've seen on the short term that the S&P is capable of incredible rallies from short covering to gamma squeeze to the Fed. Of course, we've seen that. It's done that. It's been very impressive. It's been very impressive what they did. The Federal Reserve is a very impressive entity, and you've got some of the smartest people in the world working there. They know what they're doing. There's no doubt about it. But this is real, and I think the reality of this is the fact that there's inflation and it's bad. It's bad. It's 30-year high, and they know that. So I think in the press conference they were waving the hands and it's here. It's not. It's all okay, and we're gonna. We may not raise, and the labor market's strong. And someone asked them. They said, "Well, why are you cutting it twice the rate?" And he's like, "Well, the labor market's strong." So we saw strong labor numbers on Friday. True, they were good. Most of those were service jobs, like short term, like waiter and waitress type stuff for the holidays. But it was a good number. But I think the real reason is the inflation. I think that's a big problem. And I think they didn't want to scare investors. I think that's what the whole point was behind that. So, uh, congrats to them for timing this. They did a beautiful job in terms of coordinating all of this stuff. But I don't think it's going to last. I think the reality is going to set in when this starts to come back down. This is a big deal. Fed internals. Let's talk about this. So I'm going to show you the last taper, 2018. We're going to talk about this, and you're going to be shocked at how it just looks like baby steps, like baby food compared to what we have now. This is what happened in 2018. I mean, this is like teeny tiny baby steps. Look at how tiny the Fed juice was here compared to what we see now. But keep in mind, this was positive seasonals, right? So everyone's talking about, oh, the positive seasonals, and well, you know, if they start tapering, we've had situations where we've had seasonals that didn't work out so well. 2018 was an example. This is like October, November, December. Now, clearly, we are in a different situation right now. The market is rallying at all-time highs and all this stuff. But you can see here that as the Fed starts to pull back here, the market starts to follow lockstep. Again, guys, it's this stuff always follows, the market always follows the Fed. Eventually, it shows up. We're not, you know, and it will again. It's not going to just stop working. But on the letter E here, you can see that the market starts to really fall. This was this December decline. Now this was a year where we did not have a Santa Claus rally, and the Fed was just like, forget it. And then they started surging at this point, and that was the end of the decline. So this was all caused by the Fed. This December 18, this 2018 and taper tantrum they called it. This was all caused by the Fed. This is a reverse repo disaster where they started trying to take liquidity out of the markets. They were trying to force interest rates higher by giving higher interest rates themselves. So they're trying to force the banks to do it. The banks didn't want to do it because the banks want to lend, and all it's this whole thing. But the point is, this stuff can go down during the holidays. Like it's not a given that it's going to go up in November, December. Now, you know, it's a different situation now. Markets rallying up, etc. You know, but in a lot of ways, you can argue things are you know, we're post-COVID. We're still in a very sensitive situation with the economy. I think, and at this point, you didn't see the market go as strong in lockstep as we see now. Now we see the market like literally like Fed goes here, market goes here, Fed goes here, market goes here, Fed goes here, market goes here. Like it's literally to the day now that this market follows what the Fed does. So this is what I talk about with the Fed. So this is the most recent here. But I want you to look at this channel here. This is really where they stop back here in April, and it comes back up to this channel. They come into this big dip down into here, and then this is the sell off that caught them off guard. I don't think they expected it to be this intense. And then you can see the huge response here. Now I'm going to show another slide of this. If you take out this banking holiday here, this is a banking holiday. There's no banks, so there's no Fed juice. Dude, the market starts falling instantly. The minute that they shut this down, the market starts falling, like to the day. Like there's not, like this stuff is crazy because even I look at this guy sometimes and I see this stuff happening, and it's like this can't be real. Like this can't be. How can this be? But it is. And so this is the day that they had this record surge, and then this day into here was the market was so intense that day. They had an intraday gap up, I've never seen that, or I've rarely seen that on the S&P, and that starts this big surge. And so now they're starting to pull back. Now I want you to notice that here's your channel here, right? Here's your internals. They're still falling, even with this wild rally. But notice they turn back down off the channel again. So I think that's it. And I think with the taper coming, I don't think they're gonna keep surging this up. And if there wasn't, a taper coming, I would be bullish on this market right now. Bullish. Like, and let me explain something too. In March of 2020, I called the market low, guys. I called it. I put it on Twitter. It's still there. There's a timestamp. Tell me somebody else who called the market low in March of 2020. Nobody. Everybody was talking about the end of the world. Bill Ackman's coming on CNBC. They're all talking about how the world is going to end. And I was like, no. This is a market low because I was watching what the Fed was doing. I was watching this. Okay, so you can imagine the level of aggression towards me by bears. Even Larry was pissed at me. He was like, no, it's going down. I was like, Larry, I'm watching the Fed. I promise you, this is the end. Market goes up. Turn the page, flip the coin now. Now we're at these record highs, and I'm telling people, I think this is coming down. I don't see this continuing now with the taper, and I'm getting aggression now from the bulls. The point is, guys, it doesn't matter what side of the coin you're on. You have to watch what the Fed is doing, and this is why I watch these internals, guys. So March 2020, bears are pissed. When I say that, now the bulls are pissed. Fine. Fine. Everyone's got their opinions, but I'm telling you, I'm focusing on the data here. And the data is telling me that this thing is going to pull back down. Okay. So we'll see. But I just want to kind of give you that perspective because I did call the low. Nobody called it. Go back and find somebody that timestamped that puts that on. This is the reason I like Twitter, by the way, too, because Twitter is like it's an objective timestamp. You can go there and look at it. I can't change the time. Only Twitter can. So this is why we post all of our trades, everything on Twitter. So you can go back and look and see the timeline. Okay. It's not just me saying something, like it actually happened. I actually did say that. All right. So this is, again, this is getting back to another picture here, but this is just showing the decrease here. This is the channel here. And you can see that these internals are basically falling into this channel. This was the day before the big surge on Friday with the jobs report, but you can see this is surging down and it's continuing to roll back down. I think that's it. I think this is going to keep rolling back down. I think they have to do it for inflation. I think that's the problem right now. If there wasn't inflation, I don't think they would have a problem keep running this up. But the oil is a problem, and the oil has been following the S&P. Oil has been getting weak, guys. I want you to pay attention to that too. Oil is, I think that's the leading indicator right now because that's the big inflation. So let's look at intraday. S&P here, this is, it goes all the way up to the 2.618 expansion. So for those of you who do the Gartleys and the Fibonacci's, I'll throw you guys a chart here. But this is huge. There's no more Fibonacci's up here. We've kind of checked every box there is to check here. So on a very short term, this was a moonshot, but pretty much across the board, when you look at this, this had everything in it, from the Fed fueling to the short coverage to the gamma squeeze. All this stuff, was perfectly coordinated. Anyway, but that kind of hit there. All right, so fear and greed. So let's talk about this. So fear and greed index. This is not the end all be all, but I do want to point some things out, just some interesting things. We're at record highs for 2021. The current reading is 85. That's high. And the reason why it's significant is because on the way up, this was only in the 30 to 50% range. Even during the rally to new highs, we were only seeing 30 to 50% the whole time. It was really, really low, even though the S&P, right around when the Afghanistan withdrawal, all that stuff, S&P was super high, fear and greed was low. So this was a missing component to a major high. But if we take a look now, we're running at around 85. I mean, that's getting up there. And it didn't want to get above 50 for a long, long time. So this is getting, the sentiment is there in place. So I'm going to show you this graph here. This is where we are. So this is going back on this graph. You go all the way back here to, this is 2020 here. So let's see, 2020 is here. 2021 is here. These are your peaks here. So this is right before COVID. This was COVID here. This is COVID. And you can see this was the peak here. It comes down very hard here. And then we get this huge Fed resurgence here with all of the QE and emergency lending facilities. And we get all the way back up here. Then we had this period here where it's falling and falling and falling. Notice that even when the market goes up to the highs right before September, look at where it is. It's very low. So this was missing. This is what we look for. I mean, in an ideal situation. Now, we saw with September, it doesn't need to be that high to fall. But look, this is ideal now. It's coming down. There's actually a trend line here. You can see this from these peaks coming down. So this is ideal in terms of sentiment. You want to see this. You want to see people getting bullish and aggressive and all of this stuff. But this was facilitated. This was Fed fueled, guys. This was all Fed fueled. And so the masses are getting drawn into this now. So, it's interesting that we couldn't get above that. We couldn't get above 50 or like 60 the whole time it was making new highs, and then all of a sudden now we're getting up. So this is ideal. It doesn't have to mean anything. The market we saw in September can turn, but um, it's helpful, I think, to look at it. Okay, so I want to look at relative strength. So relative strength is this is something. This is another thing that just kind of it's a curiosity. I like to look at Apple versus the S&P, and I like to look at JP Morgan. I think those are your two bellwethers. I think Apple is your key tech. Maybe you could argue Google. I think Apple more. Apple's such a strong company. So Apple, JP Morgan. JP Morgan is the Fed, guys. Okay, so there. Remember, before the Fed, the United States used to have to borrow money from JP Morgan. So just these are your two big companies. This is what I like to compare the S&P to. Now, typically, when these companies lag the S&P, it's not a good sign. So this is S&P versus JP Morgan. Now the banks start puking after the Fed announcement because of course that is not good news for banks. And higher interest rates, not good news. So here we go. So this is the letter A here. This is the relative strength of JP Morgan. And again, guys, this is just more of an observation. This is nowhere near as strong as the Fed use, but it's just an observation. So here's JP Morgan. This is the relative strength. So when this starts to fall, you can see that the banks are relatively weak next to the S&P 500. So the S&P 500 is stronger than the banks. Typically, you don't want to see that. We want to see the banking sector getting stronger. We saw the banking sector get stronger during COVID when the recovery was happening, but that is weak. So that's just something to point out. The next one is Apple. Apple is running flat compared to the S&P. Apple's not really doing too much. It hasn't made new highs. Again, so here's your indicator down here. This goes into this cell back into September, back into here. And it's been like that ever since. I mean, it did show the first sell-off in the S&P, but it never really regained the momentum. It's still heading lower. So even when the S&P recovers here, Apple's still relatively flat. I mean, it recovered a little bit. It did kind of come off, nothing like Tesla that we saw, but it hasn't made new highs yet. So, I would expect the banks to be getting strong, and I would expect Apple to be getting strong. Now, Tesla is like in its own universe. Usually we think of tech as being strong. I would put Tesla in its own special category. Now, everybody's long Tesla. So I would watch Tesla. If Tesla starts to show weakness, that's a problem because that's where your alpha is right now. That's where your animal spirits are right now. But in terms of just in general, what I usually look at, I like to look at JP Morgan. I like to look at Apple. They're both underperforming. So, okay, it's not the end all be all, but it's an observation that tends to show up during bear markets. Okay. And the opposite is true. When you get a low on a bear market, like Apple and Google in 2009, they were getting strong relative to the S&P, like very strong. So when you're at the end of a bear market, you look for the divergences to start to form with these, so Apple and Google and all these companies that were forming the positive divergences were showing you that those were the ones to buy at the bear market lows. So just something to point out. This is a little bit of a lighter webinar today. I'm just kind of breezing through the S&P. Not so technical like I've been doing. I've been going through all these technical readings of charts for you guys in terms of the double lunars. But I am going to talk about the double lunar here just to kind of give you an update on the S&P. So here's the S&P double lunar. Again, this is available on the member page on the S&P. It's still up about 400 points. It had a good trade into here, where it surges up to about 450 points. This week it actually closed up here. And then it actually tries to go short on, I think it was like Thursday. It tries to go short and it lost because the S&P goes up. But it's still up. It's still up over 400 points here. So you can see over here. This is since we started this back in April. Now, the only thing about these trading systems here is that these do have drawdowns here. You can see there was a huge drawdown here in September, but it did make it up because the volatility increased here too. So I want to point something out here. So this is a trading system in the sense that it's optimized, and I optimize all these, and so all these logs are going up on the website. You can go see them, and like I said, 2 to 3 logs a week I'm going to be putting up. But this is not a live trading service like the Big Runs is. The Big Runs is a live trading service where I live trade and give you commentary throughout the day. Hey, I'm moving the stop here. Hey, I'm moving the stop here. Hey, I'm moving the target here. Here's the screenshot. Here's the trades. This is just kind of like something you're given at the beginning of the month. Everybody's given this. And so it just tells you the path. So the advantage is you have these signals at the beginning of the month. The disadvantage is it doesn't come with limits or stops like the trading service does. Okay, so it's not a perfect system in that regard, but that's up to you guys. You guys can play this however you want. I mean, you could trade it really small. When you're talking about ETFs, you could trade as small as 1 share or as high as 1,000 shares. It doesn't really matter. You could trade options. You could trade whatever. You could use tight stops. It's really up to you. But this is given out to everybody at the beginning of the month. So it's in the newsletter, it's on the website, and you can follow this. Okay, question and answer here. So we're getting here to the question and answer. So how do I get notified of the webinars? I'm going to talk about this again because I got more emails about this week. So I talk about this every week, but for new people who are here, uh, subscribe to this YouTube channel. But go ahead right now, subscribe, click the bell, and you will get notified whenever there is a webinar. On Twitter at Wolftrader FUTU1. You can get notified there. I give updates there. I'm starting to do more posts to this free Twitter. So like all day now I'm putting charts like easy timers updated. Solar cycles are posted. The daily market updates posted. So I'm just kind of posting throughout the day like a streaming checklist of things that are going on so you can get a look and a feel. I actually did when we were in some of these fast fed, the big runs trades, I actually did post when I was trailing my stops. I actually posted those on the free Twitter just to give you an idea of the speed and the pace of these trades when I'm trailing these stops down. And so, because it's too late to be in the trade anyway, right? Because the trade's almost over. But what I do on the free Twitter is I was actually doing that so you can get an idea of how fast we're trailing these stops down. Like sometimes we go every hour, 15 minutes. Sometimes I'm doing it every minute. Like on oil, when that thing was going straight down, I mean, or up before the Fed meeting, I was updating those stops literally like some of them every minute, because when you get a volatility like that, you want to lock in the price. Okay, so what I'll try to do there is when we have I say we get a big fish on the line. When I think of like a $3 trade on oil, that's a big fish. I'm trailing, I'm trailing, I'm trailing, I'm trailing, and you can see it there. So it's kind of cool that you can get a look into the mindset of what we do here on the Platinum service. Then there's an email list, so you can sign up for that. It's a free email list. It's over on Wolftrader Futures, and then on the S&P closing bell, I do put the link on Friday. So if you're getting the S&P update on Friday, I do get the link to that, so you can find it there. This was an interesting question. Um, what would the Fed juice look like? I think they meant to say without the 0 day. Okay, so you guys know there was a banking holiday, so the Fed juice was shut off. So what I did was I deleted the zero from the Fed data, and then I put the two charts side by side so you can see how strong the response was from the Fed recently. For those of you who don't know, there was a banking holiday and there was no Fed juice, and so what happened is the next few days the market starts to fall because the Fed's playing catch up. So what I did was I deleted that day and I put the two charts side by side. This is what it looks like here. So let me see if I can show you this. So over here, this is with the 0 day. So this is when the banks are shut down. There's no Fed use. And then the Fed has to play catch up and try to catch up with that. Now, if I took that day out, you can see the difference here. You can see how intense this is. Look how intense that is. The constant run up by the Fed here to try to save this. This is when we were falling down. So make no mistake about this, guys. This was intentional. This was done on purpose. The market did not save itself. The Fed saved the market. There's no doubt about this. I mean, so you really see it when you take out the 0 day. You really see the difference, how intense they were. They were intent on stopping this decline. There is no doubt about it. But the reality is there was a 0 day here, And so you have to look, these are data points. This is evidence. So I get back to what I'm talking about. Like people have opinions about there's oh, the market can't go up because the PE ratios are too high or whatever. They have different opinions. Again, I'm focused on evidence, not hand waving and speeches and I'm going to do this. No, evidence. This is what's happening. So the reality is there was a 0 day. The banks were shut down. There was no Fed juice and the market starts to fall that day. But if you take that out, you can just see how determined they were to bring this back up. And they did. And this is why I'm telling you the market did not do this on its own. And so be careful. Be careful. This was not a natural thing. Here it is on a bigger picture. This is without the 0 day. Now, again, there was a 0 day. The banks were shut down. But I'm trying to show you, look at how determined they were. Look at how determined they were. They stopped it right here. This was the 4,300 level. It was going off a cliff. If there was no Fed, the S&P would be in the tank right now. We would be down and way, way down. I still think it has a chance to go way, way down. If they turn this back down again, I think they will with the taper. I think it's already happening at the top of this channel. I think the S&P is going to start deflating. I think it's just a matter of time. But this is the scary thing. Like if you're short on this, look at what they can do. I mean, it's they're very powerful, and like I said, you have really the smartest people working there. These people know what they're doing. This is a question I get: how do I sign up for a 7-day trial? So 7-day trial, the way that this works is that you have to make an account on the website, but you go to the pricing and plans page, you sign up, make a PayPal account, and then you have 7 days to cancel. So you have to create the account to cancel. But if there's any issues with PayPal charging you incorrectly, like I refund that immediately. So don't worry about that. Okay, so with all the indicators, where do I start? I would definitely say the double lunar cycle is a good place to start. Again, it's not perfect. There are losing trades like we saw back here. You can have big drawdowns here. So let me see if I can find that. So you can see here, even though it's up net 400 points, there's huge drawdowns here. This is a drawdown of over 200 points, but then it makes it back up because the volatility was rising. So when you have pullbacks and small volatility, it doesn't look like that much, but if the volatility spiking, the pullback looks huge, but then the surge back is huge too. So my advice is to play these small position sizes on these if you're trading with a system that does not have stops. Anyway, so that's how that works. So don't worry about PayPal. PayPal, we'll talk about the concept of trust. A lot of people don't like PayPal. It's amazing. They're like, I hate PayPal. Look, the reason why I like PayPal is because I have control over your account. Like if I need to refund something or something's wrong, or if there's something I have complete control over this. So don't think about it like you're dealing with PayPal. You're dealing with me. And so my word is good in terms of, if anything gets screwed up, I like PayPal because we can correct it. And PayPal is actually really good. They're actually really good about customer support and things like that. So that's just how the process works. So if you're interested, that's how it goes. We said double. Okay, so where do I find the double lunar cycle? Okay, so this is in the monthly newsletter. So again, this is not a live trading service. So I'm not there tweeting out every stop and I'm not trailing stops or anything, but you have all the signals ahead of time. They're also on the daily charts. When I post daily charts each day, the double lunar cycles are on the charts. They're green arrows. They're the green arrows on the chart. And then in the gold member section, when you log on, you have access to pretty much every single double lunar cycle that there is. So what I'll do is I'll take you over there to the gold member section just to show you. So when you go to the gold member section, this is what you see. So the gold member section is really like everything put together. So you have all the newsletters here. You can go here and click any of the newsletters. The closing bell for all the symbols. So I have one closing bell with every single symbol. Recent gold videos, I put all the S&P videos there. Transits, get the planetary speed index, the general combined transits. Oh, by the way, it's S&P people, I'm going to talk about the general combined transits for November, December. It's really interesting. As the Fed gets weaker, these transits become more important. Okay, so this is going to become important. Optimize Bradley, the solar cycles. This is what I talked about for the 4 months, and then the solar cycles for the whole year. These are just updated now. Double optimized lunar cycles. So if you're a gold member or a platinum member, you come here to the gold page. So I'm going to open up what October looks like. So when you open up the page, you see every single market here. So this was October. So this is what happened in October. So you go down here. So it starts out with copper, silver, gold, platinum, corn, natural gas, oil, heating oil, gasoline, US dollar, Canadian dollar, British pound, euro, Japanese yen, Australian dollar, euro dollar, Bitcoin, Ethereum, Ripple, Litecoin, 10-year bond, S&P, Caterpillar. Now this was the one digital cycle that I put up for the stocks ETFs, but all of the stocks and ETFs are going to have these digital signals now. So this is coming, like I said, for the first. So if you come here to this page, all you got to do is you got to click the chart and it opens it up, and then you can print this up. So if you want to print this up, it has a white background. It's really easy to print. So that's how you would find the double lunar cycles in the gold member section. So I like the gold member section because everything is right there, like organized, and you can go to any newsletter, you can go to any solar cycle, anything like that, and you can just, it's kind of a one-stop area. And again, platinum people have full access to that. So next question. Where do I find the S&P trade logs? I think I showed you this before, but you would go here to the S&P login, and there's a black button on the bottom down here, and then this is where you can see the trade logs. So again, this is something that's given to everybody. I just showed you where to find it on the gold member section, but it's also on the S&P newsletter, and you can see the results here. Okay. Final question. What is the taper time? We talked about this, but I'm just going to answer it one last time before we end the webinar here. What is the taper timeline, and when will the markets feel it the most? So here's the taper timeline here again. So just to summarize here, we did just talk about this, but one last summary here. We are currently at $120 billion per month. They're going to start a taper of about $15 billion a month. So as this continues here, as this taper continues, I think it's going to be a deflationary force on equity markets, probably other markets too. I would watch oil. I think the advantage of the S&P going down is that oil will go down probably. So I think they're trying to get a taper. They're trying to get a fix on. They're trying to get a control on the inflation. I think this is a good way to do it. Probably when we get out into late December, January, they're going to really start to feel it. Because by the time you get to February, you've already have a 50% reduction here. Okay, so I think each month, once you I would think the December, January area, you're going to really start to feel it a lot more on this S&P. So that's just a summary again of this, and I'll give a copy of this to subscribers if they want a copy of this. But it's coming, it's real, it's serious. 15 billion a month is not, it's double the speed of before. They're serious about this. They have to do it. The inflation is a problem, and I think they know it. I just think they didn't want to scare people. All right, guys, we made it. Trying to get this under an hour. Oh, we're an hour and 3 minutes. Okay, so it was relatively light today compared to all the technical stuff. But each week we do a different theme. So if you guys want to see a different theme next week or the week after, just let me know, and we'll talk about it. So I'm open to kind of anything here with this S&P. We got a question here that says sell off into the full moon. You know, I'm not real big right now on new moons and full moons. I'm more big on terms of following what the Fed is doing, but I am big on the transits, the general combined transits, and the stuff that's coming this month is important when the Fed starts to pull back and the Fed's starting to pull back. So I'll put that for subscribers. For the S&P subscribers coming in. If you guys want to sign up for the 7-day trial, you can head on over to wolftraderfutures.com/pricing plans. Shane at wolftraderfutures.com. And remember, guys, the stock and ETF package is getting those upgrades coming this week with the digital lunar cycles, the same one that you saw with the S&P. So you're going to get those turning points. So we will continue to have these upgrades as we go with the stock ETF service, and that will get caught up to the other services. Website, wolftraderfutures.com, fedjuice.com. And I think that's basically it, guys. We're getting a little bit of a streaming issue here, but thank you so much for coming today, guys. I really appreciate that. I hope everyone has a great weekend. The weather's getting super nice out there. Things are cooling off finally, so enjoy it. Enjoy your Saturday. Watch some football, and we will see you guys. S&P subscribers, we'll see you tomorrow. So tomorrow I'll have a video for you, and I'm going to talk about the changing landscape here with the taper, and then I am going to talk about the general combined transits for December, which is really important. Okay, that's such a big deal. Hey guys, thank you so much. Thank you, Gary. Thank you, Pat. Thank you, Ron. Thank you, Al. Hopefully I didn't miss anybody. I know everybody's here. Our gang is here, but I appreciate that. So I'm going to sign out now. So everyone, uh, enjoy your weekend, and I'll talk to you soon. Peace out.